So most people think their property is safe because nothing has gone wrong so far. And if you are running a business in Singapore and Malaysia and you're still planning based on how the bank behaved as before, so question is what happens when approvals slow down? The loan amounts come lowered and the conversation from the bank becomes less risky, more cautious through your deal, and you realize, hey, how come something has changed even though you're ready to commit to investing. And if you're really holding a property right now or properties, have you actually looked at your situation right now and asked this question, whether it still works if refinancing takes longer and valuation is softened and your tenants suddenly leave at the wrong time instead of everything lining up nicely as before? Because most people only test their assumptions when they are forced to, isn't it? And if nothing has gone wrong for you so far, good news, this is exactly when you should be paying attention, because property problems do not show up when things break. They show up when things stop being as easy as before, and most people ignore that moment because it doesn't feel urgency. So stay with me for a while, because there are three things here that matters more than all the usual property talk. Now, first is what is already happening in the background that most people are brushing off because it doesn't look like their problem yet. Second is why this matters now, even though nothing looks broken. And thirdly is what you should quietly, secretly look at your own situation so that you don't get caught up adjusting yourself when you have no room left. It is too late. Now, if this already feels closer to your reality than the usual noise around you, well, do me a favor, click like, share, subscribe to this channel if you haven't done it, because most people might be still watching prices and missing what is actually deciding whether they win or lose. Okay? So, most people look at property and focus on what they can see. Well, the location, the entry price, the rental, future upside, capital gain. Well, it feels like a good deal, okay? But none of that moves unless people get financing. And this is the part that people conveniently ignore from my experience when things are smooth, because the problem is not urgent. Now, when loans are easy to get, which is kind of the current situation here, everything is easy. When buyers shows up, banks move fast, deals go through, and even average decision becomes a smart decision. Now, question is this: when loans start getting a bit tighter and harder to secure, when everything is slowing down just enough for you to feel it in a small way. Okay, and this is where most people get caught because nothing looks broken yet. And to me, the shift has already started. Now let's look at some background information for the time being, which I've done some research. So Reuters reported that BlackRock had to limit withdrawals from one of its private credit funds because too many investors wanted their money back at the same time. And at the same time, other players like Blackstone and Blue Owl have also seen similar pressure. And this tells you this is not isolated incidents. There's a behavioral changing at this point in time. Now, JP Morgan has also started marking down some of these loans positions, especially those linked to software companies, SaaS companies, which simply means they trust the numbers less than before. And when the bank starts trusting less, guess what? You should already know, something is coming next. And if you zoom out, the BIS pointed out that lending into software companies in this space has grown to more than 500 billion over the past decade. And the IMF has already said that many of these borrowers were not generating strong cash flow even before recent pressure. And this means they look stable because conditions were easy, but deep down they are not strong. Now, so if you are going to pay attention, the direction is pretty obvious to you, right? The people controlling the money are already becoming more cautious, more careful. It's just that they do not say it out loud to cause fear in the marketplace. Okay? So when big money starts pulling back even slightly, while banks do not panic. They just tighten, takes longer, ask more questions, and they give less, and that alone is enough to change your situation whether you like it or not. Now, this is where most investors are still looking at the wrong thing, my friends. Look at this. They are watching prices and headlines. But what actually decides whether you make or lose money is whether you can hold your position when conditions are no longer helping you. Okay? So, I need you to be honest. Your confidence right now is really based on a few things that goes right at the same time. Your loans go through, your tenant stays and pay you rental, valuation holds, and as long as these things line up, everything feels okay. But the moment one of them slips, there's the domino effect. The whole situation could change. Now, some of you already know your numbers do not really hold, okay? I need you to be honest to yourself. You're just hoping nothing tests it this year. And if your plan only works when the bank says yes quickly, then you do not have a plan. You have a timing problem. Now, property doesn't punish you for bad deal, but it is actually about weak holding. Most people do not lose money on property because they can choose the wrong asset. They could lose it because they couldn't hold it long enough when things stopping going their way. And by the time they realize that, the decision is no longer theirs. This is where people in Singapore and Malaysia get comfortable because they said, hey, Singapore is a safe haven, land is limited. Malaysia, on the other hand, is attractive because the entry is low, and there's still upside. I think all that sounds reasonable, logical, right? But a good story has never fixed a weak position. Now back to you. If your situation depends on refinancing going smoothly, tenants staying and paying you rental, and the market behaving the way it has been, then what you really have is something that works as long as the conditions stay friendly. And that only feels safe because the environment has been carrying you. Now that feels okay when everything is smooth. But when things tighten even a little bit, the same situation starts to feel very different. Not because anything has collapsed or is gone, but because support has been reduced. Think about it as like carrying a bag that feels light when you are standing still. But the moment you start walking uphill, you suddenly feel the weight. And the bag didn't change, it's the same bag. You just lost the easy ground. So right now, the ground is already sloping, just not steep enough for people to admit and confess. And this is the part where people avoid because it's ugly conversation, right? Because nothing has broken yet. It seems to be everything looks okay, but you might be less flexible than you think. So you start asking whether a property is a good or whether property investment is good. I will invite you to ask something more honest. If one thing goes wrong, just one thing, can you still hold it comfortably? Can you still sleep at night easily? So don't answer quickly. Actually think about it based on your current loans, your current tenants, and your current cash flows. Because the answer will tell you more than any market report and headlines. If your bank reduces what they are willing to support you, what changes immediately in your plan? And are you prepared for that? Or are you assuming it will not happen in the brightest scenario? If your talent leaves at the wrong time, do you have the space to hold? Or would you start making decisions just to relieve pressure? And if things take longer than expected, not collapsing but just slower, do you still feel in control or do you start feeling tight? Because these are not extreme situations. These are what we call normal shifts when conditions becomes less friendly. Now, some people think they are investing, but if you look closely, they are depending on what? Depending on refinancing, depending on talents, depending on things going right. And that works when conditions are easy. But conditions don't say the same, isn't it? If this is making you uncomfortable, that's a good sign because it means you're looking at the right things right now. So do like this video, Share this video with someone who is also into property investing and businesses in Singapore, Malaysia. Subscribe to this channel if you haven't done it, because most people, I bet, will ignore this until they are forced to deal with it. In fact, I would say 95% of the people will not even care until the problem happens. So what should you do right now? Because you're watching this video. Good news, without complicating things. Well, number one, start by looking at your financing honestly and assume the bank is already stricter than before. Check if your numbers still hold without stretching. Build enough liquidity so you are not forced into bad timing. Be more selective about what you call an opportunity, and pay closer attention to who is paying you, not just whether the unit is filled. And then look and do something simple this week. Well, this is end of quarter one at the time I'm recording this video, end of quarter one 2026 already. Take one property or one loan and write down exactly where your pressure points are. So you do your personal stress test. It's not based on what you think, but what actually is there. Because once you see clearly in front of you the numbers, you can't lie to yourself anymore. Now, coming to period 9, which I've been talking about on this channel many times, the question is not whether there is opportunity, because there will always be opportunity. The question is this: whether your current situation allows you to stay long enough to see. You will remember at the end of the day, cash is king. Cash flow is queen. Do you have the cash flow to help you see all the opportunities out there when the situation goes badly? The market doesn't decide who wins. The pressure does. Some of you who are old enough experienced 2008 global financial crisis would remember what happened then. Fire sales everywhere. The question is, do you have the cash flow to support you? By the time everybody starts talking about risk, because not everybody talks about this right now, there are only a few people on the YouTube channel talking about this. Well, you will see that the flexible people have already adjusted. Me too. I've already started repositioning my situation to prepare for this. And the ones left are the ones hoping things will be back to normal, hoping the government will help them, will save them, will support them, or just pray that the worst thing will never happen. Well, true enough, if you want to go deeper into how to position yourself properly as a business owner or property investor in Singapore, Malaysia, do come join my Destiny Architects Telegram chat. Because by the time it becomes obvious, guess what? You are not choosing, you are reacting. And message is, you are too late. See you in my next video.